for people that are buying Bitcoin and they're not intimately familiar with financial markets, they might look at it and be like, well, over the last year and a half, Bitcoin's down, or whatever time frame they want to kind of slap on whatever metric they're trying to produce. Like, I can give you a metric that since the start of this year, Bitcoin's up 50% or whatever it is, 60%. So as you're choosing these time frames, you have to ask yourself, why did you select that period of time? Because I can go back to 2015 and give you a time frame to now, and Bitcoin's performance is a parabolic chart. So when you're comparing all of this fixed income, financial jargon that we love talking about, right? But for not everybody in the room that's intimately familiar with the financial jargon, it can just sound like, what are they even talking about? The point that I would tell that person is, you go through these cycles, these governments step in, and when they're tightening the dollar or they're loosening the dollar, it's normally like a year and a half that they could tighten, 2 years that they can tighten. And then they're going to get exhausted, and then they're going to have to loosen. That loosening rate, though, if you look at it on a long time frame, like let's just take 10, 15 years, that loosening of the dollar is about 7 to 7.5% just for the dollar per year. If you did a compound annual growth rate on the M2 money supply, that's about 7 to 7.5%. What it appears is that rate is going to be persistent, if not accelerate, moving forward. So when we're comparing the dollar or the euro, which are the best fiat currencies, those are the best performing fiat currencies. So when you look at any other fiat currency, it's in excess of 7 to 8% annualized, right? So when you're looking at Bitcoin's performance, I would say at a bare minimum, without anybody else even coming into it, but just like sustaining the amount of people that are coming into Bitcoin, you should expect at a minimum that rate of return, because that's how fast they're debasing dollars in itself. You compound that with the sell-off rate out of fixed income, which is really kind of what we're getting at, right, with bonds, is the government is issuing debt at a pace that is outstripping reality. When you look at the tax receipts that we're collecting to pay for the issuance of the debt, it's accelerating. We're not dealing with 7 or 8% on the horizon for the coming 5 to 10 years. So when you look at Bitcoin, which has a fixed peg of 21 million coins at its terminal rate, and you're comparing that to this other system that is exponentially increasing in a bond market that they can't keep up with the issuance, that's the thing to focus on, because you can select whatever 6-month period of time or year time frame that you want to select out of that past performance, and you can jerry-rig whatever type of narrative that you want. But when you really zoom out and you look at the bigger picture, that's the thing for people to focus upon.